This conference will now be recorded.
Good evening, everybody. This is Greg Morton. It is Saturday, August 28th, 2021. This is the Canslim Growth Stock Weekend Update for the Greenville Eastside IBD Meetup Group, as well as the Stockyard Meetup Group. As always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses. You need to learn first and only then invest. Or in plain English, you're responsible for your own mistakes, not me. And while I say that sort of facetiously, it is really important to make sure you are making your own mistakes, because that's all you can correct. If you're investing off tips, news stories, advice from other people, then you're incorporating their mistakes into your trading process. And you can't fix other people's mistakes. You can only fix your own. So you really do have to learn to trade in a vacuum and then use post-analysis to improve your rules and to correct your mistakes. So this weekend, as always, we'll look at the M factor, talk a little bit about possible news volatility ahead. Again, look at a couple charts, and going to go over a couple principles, thoughts that I've had lately, and then we'll go over our upcoming meeting in September and briefly touch on our prior meetings. So the M is the most important letter in Canslim. O'Neill talked at one time about how he would have liked to have put it at the beginning of the acronym, but he just didn't come up with anything that worked well. So it's Canslim, but the tail end is actually the most important. So as always, we want to interpret it. We don't want to predict, and we use three things in this order of importance: action of leading stocks, actions of stocks we own, which we use the group teaching portfolio for discussing that, market pulse, distribution day count, price and volume on the indexes. So let's go over to Market Smith, as well as my coloring book and the group teaching portfolio. And let's look at the indexes first. So the indexes, pretty much been okay for a while now. It's been that rotation underneath that has been a problem. But this week, you just look at the NASDAQ, all-time closing high, all-time closing high, all-time closing high, down one day on lower volume, another all-time closing high on an uptick in volume. So, I mean, we clearly are in an uptrend. S&P 500, same thing. All-time closing highs look like 4 out of 5 days this week. NYSE, not quite as good, but trying to get back to all-time highs. Moving average lines are getting in the correct order. Dow, some, a little flattish, ran into a little bit resistance, but it's fine. No problems with the moving average lines or anything. And then finally, particularly on Friday, the Russell sort of came to life. It closed down here under the 200-day, which was worrisome. It's come back up. It's retaken and closed above the 50-day, and it was up 2.85%. So that's a phenomenal daily gain on a pickup in volume. A small cap S&P 600 looks about the same. So in working on getting the moving average lines back in the correct order. So if we switch over to Excel and look at my coloring book, which I use to help me track market direction, 25-day window starts with the orange dot. First, look at our distribution days. We only have 2 on the NASDAQ, one right there on the 6th, and one on the 17th. And then we have 3 active ones on the S&P 500, 1, 2, 3. They have the dotted borders around them. And we have 2 on the Dow. So we have a low distribution day count. The buying selling day count, still in the red, have 9 buying days, 10 selling days within the 25-day window. So we're just kind of having a little tug of war back and forth on there. MMTS trend lines green on the NASDAQ S&P 500, just flipped to green on Friday on the Russell and the S&P 600. The NYSE and the Dow are close to flipping to green, like maybe the 10-day moving average line hadn't turned back up yet, but it's very close. So those easily, if we have another good day or two, those will flip to green. Market school exposure is at 5, which is 100% invested, and the power trend remains under pressure. Steve Sweat's window of opportunity remains green. Yeah, you can see the all-time closing highs 4 out of 5 days this week, and the S&P hit all-time high and then all-time closing highs 3 out of the last 4 days. So you can see what was breaking out this week. Also, those are marked. Some good Canslim names in there: Palo Alto Networks, Zim Shipping, ACLS, Dix gapped up. So NVIDIA, I think, was at the end of the prior week. So you can just sort of see and track and see how those are doing. And so that all looks good. We do have a week from Monday be closed for Labor Day, so expect a low volume day this Friday. Also, normally, also no IPOs this week. There's a end of summer break every year, so we've been in that for 2, maybe 3 weeks now with no new IPOs. So those will pick back up after Labor Day, and that's just normal. That happens every year at this time. And flipping back, look at the group teaching portfolio. Currently have 9 positions. A couple of them are full, 2 of them are oversized because they had add-on buy points. So 60,000 basis is the full position. So you can see AVTR and Dexcom are both bigger. We're up 18.34% year to date and 100.16% invested. So we use just a little bit of margin, less than $1,000, with some of the end of the week buying this week. So this is on the Greenville Eastside IBD meetup site, so you can look at the whole thing and the detail pages, sold pages, all the background. This is just the dashboard page showing you year to date. Also, Friday was what I call Bossel Day, Bill O'Neill Sell Your Loser Day, at an advanced seminar. I was told that at least at one time he would review his portfolio on the last trading Friday of the month, and he did not want to hold more than one losing position at that time. So if he had more than one that was in the red, he would seriously consider cutting the other one. He probably never had more than 2 that were in the red at the end of the month. That was Friday, and actually in the group teaching portfolio, we didn't have anything in the red. Now, that doesn't mean this was great trading, because Canslim has the system, the stops, took us out of positions. Twitter didn't work, Square didn't work. Trying FIGs a second time after a good trading at the first time didn't work, got stopped out of that. So you can look on the sold page and the second page and see what we got stopped out of. But by the time we got to the end of the month, we did not have more than one losing position. We didn't even have one. So that didn't trigger having to evaluate or get rid of anything. So let's go back to the presentation. So last weekend, I gave you, and you can go back and watch that video if you need to, talked about the 4 wise men. Ryan was cautious, Minervini was cautious, Kevin Marter was cautious. We're going into seasonally a weak time. Charles Harris, a Neil portfolio manager, was the more aggressive of these 4. He said just too many people were too bearish. Everybody he talked to was bearish. He was like, that was a good contrarian indicator to him, and kind of proved, at least last week, that's how things went. Had a pretty strong week overall. So it's still a stock picker's market, but we are still seeing Canslim setups, and we're seeing leaders making progress. So that's good. You want to do a weather report, not a weather forecast, so don't predict. As I said, this has still been a tough year. I don't hear a lot of really good traders say, yes, this has been a tough year. And it's because the indexes have been strong on the surface, but there's this nasty underlying, it's a riptide rotation that's just sucking your feet out from under you, that has made it very difficult. And you even see that in the paper each weekend. The 1 or 2 mutual funds that they highlight, those managers are significantly lagging the S&P 500 performance this year. So, still some uncertainty. I said last weekend, my rule is when things are really uncertain, more defense than offense, particularly if you get knocked out of your last 3 entries right in a row. Just want to remain super disciplined with any offensive moves. Make sure the setup's there. Make sure you're buying right. That solves 85% of your selling problems, to enter correctly, to not chase. And I would say that the uncertainty decreased or lessened some this week. So it's, if things are working, making progress, it's acceptable to be pressing but not stomping on the gas pedal, and see if this market can continue to climb the wall of worry. So in the week and weeks ahead, still have some EPS reports trickling in for the non-fiscal year reporting companies, so keep an eye on those. Afghanistan, obviously the terrible events of last week, and then the August 31st deadline is on Tuesday, and heightened risk of more attacks. Then Delta COVID goes back to school. Around here, I'm in Greenville, South Carolina. It just seems like things are really ramping back up pretty quickly, particularly within the school setting. So we'll see what happens. And then you've got this hurricane that sounds like a massive storm approaching the Louisiana coastline and hitting Sunday evening, I believe was the last thing I read about that. So all that, just a lot of events. And then our next Fed meeting will be September 21st and 27, after we just had the Jackson Hole Zoom event this past Friday, which really, whatever Powell said, the market must have liked it. So because we had a strong day with some nice volume for the summer on Friday. So a couple of thoughts and charts. So some things that just kind of popped up recently. Shipping cost, talking about overseas coming across the pond, seemed to be skyrocketing. Figs warned about this. Their clothing, I think almost all of it's made in China. Burlington Stores this week warned about shipping cost. So if these companies are having to use air freight or something, or just the shipping cost apparently have just tremendously increased, like lumber did, tripled or whatever. So do stocks you own or stocks on your watch list have this increased shipping cost risk? Because obviously that just cuts right into the earnings per share. Just something to be aware of. It may be a risk to avoid if you can avoid it until shipping prices return to normal. It's sort of like with all the China mess and the government. I'm not interested in any Chinese stocks. Till all that stuff blows over and settles down, just forget it. I mean, I normally wouldn't own more than one at a time anyway, but I'm really not even looking at them. I'm not putting them on my watch list now. Just way too much risk that there's no way to evaluate. And then another thought, I put this on Twitter, was is lithium the new gold or the next gold? I first heard about this 2 weeks ago, maybe. Ed Carson was talking about it on IBD Live. This is very important to the electrical vehicle. In batteries, he talked about how long it takes to mine it and bring it to market. And that there's, with all the major auto manufacturers committing to move partially or substantially toward EVs, he just had a really interesting discussion. And then on the podcast this week with Justin and the guest that they had, the same thing came up, and more details on it, and even different kinds of lithium were talked about, and the ones that give longer, I think it was lithium hydroxide. I don't know, go listen to the podcast because they covered it. So that keeps coming up. The EV transition is coming. So, is lithium going to be a picks and shovel play in this EV tsunami? Just like back during the gold rush, not many people made money on gold, but everybody selling picks and shovels and pans did make money. So just something to keep an eye on. So let's jump back to Market Smith. Just look at a few charts this weekend, just for the heck of it. IBD had an article on all the shippers this weekend, so I just threw those in a list. Let's just flip through it. Let's just look at weekly charts and see if you can sort of see the similarity and patterns. This is them. This one's liquid, 104 million per day. This is probably one of the leaders, recent IPO. set up in a 32% deep stage 1 case. Base has broken out. It's in the buy zone, has strong Canslim numbers. Here's one. This one's thinner, 8.8 million per day. I just put it in here not because it's really a candidate to purchase. It's just one of the shippers. So even though it's thin, just kind of look at these. Look at the patterns. These are set up. RS line going to new high. Matson Inc., another shipper, set up. Stage 3 cup though, so have to be aware of that. G and K, gotta go through and analyze these, do your due diligence, see which ones. But these all have nice Canslim numbers. That one's thinner, 16 million per day. Starbulk, this one's okay, 42 million per day. Again, stage 2 cup. By now you should have seen they're all set up in basis currently. GSL, 14 million. This one's thin, again, set up in a cup. And then Breakwave dry bulk, this one's thin, 7.4 million per day, set up in a consolidation. So, you know, you talk about group moves, you can sort of see those are moving together, and you just have to go through them and analyze each one of them, see what they do, how they trade, who owns them, look at the Canslim numbers, and then if you're interested in that space, we don't have any of these in the group teaching portfolio currently. And then just a couple charts to look at for this weekend. So we looked at Aventor last weekend. This just continues to nicely go up. I think it's up like 8 weeks in a row and 11 out of 12. Just behaving nicely. Have this in the group teaching portfolio. It's about at the 20% profit goal, so you have to decide, hey, gonna hold this one for short-term profit extension, try to make a little money, sell some at the 20% rule goal, 25% goal. So I have to make some decisions there. Dexcom is another one. Let's go to the weekly. Look at all these nice weeks up in a row, and then has the gap up, and it's just consolidating. Be nice if this turned into a flat base. I think it just needs a little bit more time. You can see clear resistance. This is kind of an ascending triangle, flat kind of, see if I can cross there and then up there. You can sort of see that. No way to really know which way triangles break, but when they do break, they usually keep going in the direction they break. So maybe that one breaks up. We'll have to see what happens. And then Palantir, this is one that's set up. Now you have a cup with handle, put a handle on this base. Good Canslim numbers. Problem with this one is the overhead supply may be too much, may or may not be on somebody's watch list. Very liquid, trades over $1 billion per day, and has, you know, turned around, become profitable, and putting up some good numbers. So maybe one to study. And then Livent Corporation. So this is one of the lithium plays. This is the one that was mentioned on the IBD podcast. Recent IPO. It's kind of gone through that due diligence phase. Now it's set up in a stage 2 consolidation, a little bit deep. That green line is its all-time high. So it went above that, broke down, came back above it, and is in the buy zone on the breakout from this consolidation. Again, Canslim numbers, trade $72 million per day, has low return on equity and pre-tax margin, but some of that had to do with these quarters it was losing money. So that, you know, maybe one to watch and keep an eye on. Look at the daily chart. Yeah, so it actually broke out and then failed. Looks like it hit the 7% stop loss, and now it's back in the buy zone. So that's not ideal, but again, these may just be watch ideas. You have 2 of the IBD mutual funds in there. All right, so our monthly meetings, we last met on Tuesday, August 17th. These are the big educational meetings. We looked at the M factor, some watch list stocks, some recent IPOs, stocks the group picked, and then our big educational topic was dealing with earnings season and your rules for holding through earnings. Cushion rule, We talked about really everything, always selling or always holding. Some people use that as the rules, the in-betweens, and we did post analysis in the group teaching portfolio on every stock in there that had recently reported earnings. So I put the thinking in there, discussed the cushion, discussed implied volatility, and then talked about the decisions that were made on each of those in the group teaching portfolio right before earnings. And then we talked about how you handle them after earnings. So we walked through those in great detail. Our September meeting, it's on the calendar now, Tuesday, September 14th. I'm gonna go back and update what I did, I guess about a year ago, on the how to do a weekend routine using MarketSmith, the Growth 250, as well as the newspaper, how to build a first pass watch list, and then the really important stuff of how do you narrow it down. There's a ton of people out there who can put up a watch list of 20 stocks, but you can't manage a watch list of 20 stocks during the week. The key is narrowing that down, doing the work. How do you cut that down to just 3 or 4? How do you get to the best of the best that O'Neill tells us to focus on? How do you do that Canslim evaluation? So we're going to cover that at our September meeting. Here's a list of our prior meetings. These recordings are available to order. It's the same $10 tuition cost as the monthly meetings. If you don't have a written set of sell rules, I actually spent 3 months this year going through that in great detail, talking about all 3 trading zones on the MarketSmith chart, writing your rules, hard stops, soft stops, what do you use? Just went through everything that can possibly come up. Selling at the 20% profit goal, holding some for short-term profit extension, how to identify true market leaders that you're going to hold longer than that. Went through that in great detail, and if you go through those 3, and we looked at my sell rules and the third one, my written rules, but you should be able to write your own set of rules and then adjust them through post analysis if you'll go through those 3 teaching sessions. And then the past couple months, June, we talked about ETS for Canslim investors. July, I walked through the newspaper and covered viable gap ups, setups, how to handle those. And then on the 17th, like I just talked about, we did addressed in detail the topic of how and when you hold through earnings and one possible set of rules for evaluating whether to do that or not. So I think that one will be real helpful. If you're new to the group, if you just sign up for the September meeting and that's your first meeting, I actually send you a courtesy copy of the previous month's meeting so you can get that one without even ordering it. So the meetup sites I have are the Greenville East Side IBD meetup and the Stockyard meetup site. So a lot of the Canslim resources are on the Greenville site, including the group teaching portfolio, the coloring book. Those are uploaded each weekend. If you want to order prior classes, you can email me at this email address and I'll send you the list and ordering instructions. You can follow me on Twitter. And then, of course, I have the Stockyard by Greg Morton YouTube page. And here's what the meetup sites look like. Here's the Stockyard. So this is the one I just run the monthly meetings out of. So that's where you sign up and RSVP for those. And then I send a detailed email about 24 hours before the meeting with the access code and instructions. And then I send the recordings and slide deck out usually the morning after the meeting. And the Greenville East Side site is here. All the good stuff is hidden because Meetup's not very good with their websites. But if you'll go to the More tab, message boards, and then the top 2 pinned posts are from me. So there's tons of links in here. The first one, group teaching portfolio, I'll link the current one. I may have forgot to do it last weekend. Sorry about that. And then I'll also link to the updated coloring book, and there's just a ton of other resources in there. So both those message boards, you can look at those and get a lot of information. So that's it. Hope you guys have a great weekend routine. Try to come back next weekend, although it's Labor Day, and bring an update, and we'll see what the coming week looks like. Y'all have a good one. I'm out of here.